Oh man, another account blown. How many times have I said that? Too many. If you've ever blown a prop challenge because you've become emotionally compromised, massively over leveraged, and the market has gone against you, then this is the video for you. Welcome back to the series where I break down how to trade and to actually pass challenges, even with your ADHD brain. ADHD brains are built for speed, novelty, dopamine. Prop challenges are built for patience, consistency and restraint. It's like having a system built for fast markets, but you're only able to test them during the consolidated market. It's basically useless. All traders suffer from emotional dysregulation, but we know it's harder to keep a handle on it. It's tempting to go straight into a strategy, but until you're aware of the emotional behaviors you're bringing to trading, you're not going to get far. The 5 emotional behaviors that can wreck trading are impulsivity, boredom, hyperfocus, emotional swings, and forgetfulness. Any of these sound like you? Don't be too hard on yourself. We all make mistakes. It's just that it takes us much longer to learn from ours. But sticking with me and go through them now, and once we've mastered these, we'll move on to your first practical takeaways to become a successful trader. 1. Impulsivity. You see something and you don't bother doing proper analysis, you just want to get in and feel the joy of winning the trade. But the reality is that instant gratification you get from entering the trade is quickly replaced with disappointment and anger at losing money and not following the rules you've set for yourself. 2. Boredom. Nobody wants to be sat for a session and not productive with our time. Many of us start to trade literally out of boredom, only to find that we're taking trades we shouldn't take and finding ourselves in trades we don't want to be in. It's absolutely fine to be in a session at the computer without taking any trades. You only want to take trades that are aligned with your strategy and system. Remember the words of Jesse Livermore from the last video: money is made by sitting, not trading. 3. Hyperfocus. What I found was I would be so focused on the screen, maybe a lower time frame, maybe a candlestick movement, maybe individual pattern, that I would lose track of the bigger picture and end up trading against a market flow. I'd become trapped in trades without a real plan, and as the hours went by, I'd feel more and more confused. It's very important to take a step back and remind yourself of the bigger picture. Realign yourself with what is actually going on rather than zooming in on the minor price movements. 4. Emotional swings. This is something we have to be constantly mindful of when trading. We can have emotional swings when we win and when we lose. After a win, we're flooded with dopamine. We feel successful. We feel like we read the market perfectly. We feel unstoppable, but this can lead us to over leveraging and putting too much size on a position. The moment a trade goes against us, we go from feeling absolutely amazing to thinking, oh no, I'm going to blow this account within the blink of an eye. Here's another scenario. We've entered a trade that has gone against us. We feel like the market has cheated us. How did the trade not work? You enter again. You get stopped out again. You think to yourself, my indicators are saying this trade should work, but before you know it, you've lost 6 trades in a row and you've gone outside your risk parameters because you set a limit of 3 trades a day. And this is all because you are now completely dysregulated and have become emotionally compromised. 5. Forgetfulness. You might think this is the easiest of the struggles to conquer, but I can assure you this one can creep up and get you when you least expect it. The amount of times I've been so locked in on a trade on my phone, not saying you should trade on your phone, but I did a lot in the early days because of lack of impulse control, and my battery would run out in the middle of a trade. You might think this is ridiculous, but my hyper focus on the candle stopped me from seeing I was on 1%. Imagine a horror of your phone powering off and you having no stop loss and no idea where your trade is. Or you've sat down, you open your charts and you've entered a trade. The next thing you know, the market's going absolutely berserk. What have I not done? You haven't checked the market news. Now you're about to be stopped out, and it's a loss that could have easily been avoided if you only had something in place before you start trading. So those are the key emotional behaviors you've got to stay on top of if we are going to take money out the markets. Staying regulated requires us to be constantly vigilant. And later in this series, we're going to talk about routines, structure, impulse control, emotional management, everything you actually need to pass a challenge with ADHD brain. Okay, let's imagine you've taken the time to think about your emotional regulation. You've identified your own personal pitfalls to avoid. It's now time to get started and think about the first couple of practical steps you need to take off to a flying start. Step 1. This might seem obvious, but research the prop firms' rules. There's hundreds of firms and they all have their own rules. It's crucial you learn these rules and internalize them before you start your challenge. For example, some allow news trading, some don't. Some allow you to hold trades overnight, some don't. Some allow you to copy trade, some don't. The point is, the strategy you build must be in alignment with the prop firm that you choose. There's no point trading with FDMO if you're going to hold trade for weeks, because they won't allow you to do that. If you're a swing trader, do your research and find the best prop firm for this style of trading. Step 2. Now you've sorted the prop firm that's best for you, trade in a manner that you'll be able to replicate in real life once you've passed the challenge. Rome wasn't built in a day, and nor was a trading career. Aim for small percentage increases, and believe me, this method will always succeed over time. When I start a challenge, let's say a 20k, the overall loss amount might be £2,000, which is 10% loss, and would lose the account. I see these accounts as £2,000, but they offer more buying power than the £2,000 account would. I will only risk £50 per trade and go for a £150 gain, which is a 3-to-1 risk reward ratio. I will trade the account until I get it to 22k. In theory, you can pass from 14 trades, but we know there's losses along the way. It's likely it will take you roughly a month or two to pass, depending on the market conditions. I can't tell you how many stories I've heard of people passing a challenge in a matter of days. They're not getting to a payout because they're forcing trades. Prioritizing short-term wins over long-term sustainable success is not how we want to trade. So if you can do your homework and work out the maths behind passing, then you're ready for my next video. How to create routines that stop overtrading. If you found this video helpful, then like, share and drop a comment below. Let's get a conversation going. And I know there's other people out there like you who are overcoming their struggles to become a profitable trader. In the meantime, be safe and trade sensibly.